Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is June 11th, 2025, and today on our call, we have back the CEO, Angela Cechetto from Grey Wolf Animal Health. Grey Wolf trades on the TSX Venture Exchange under the symbol WOLF, or WOLF. The company is currently trading at 95 cents with about 34 million shares outstanding, or about a $32.5 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, great. Thanks, Trevor. Angela, welcome back. Great to see you again. We've caught you after your Q1 numbers, which I saw were up quite nicely this year, and a lot of reasons behind that. So we thought we'd have you on to sort of explain how things are going and explain what's happened in Q1, and ideally get an idea of what the future looks like. So before we jump into any kind of those pieces, why don't you just remind everybody who's kind of new to the story what Grey Wolf's all about?
Yeah, well, thank you, Paul and Trevor, for having us back on this call. It's actually an opportune time to kind of give an update because a lot has been happening in the last 12 months, in particular with our company. So great timing, and we appreciate it. Our business has really changed. It's changed a lot since when we started, hard to believe now, but 10 years ago. But it's even changed a lot in the last 12 months. And we've really focused on architecting the business in such a way that we can have this outsized sort of impact on the markets that we are serving in. And so, as I said, we were founded 10 years ago, and that company really focused on providing products for the health and wellness of companion animals. And this would be cats and dogs within the vet channel in Canada. And we have built a solid business in this space. And historically, that has been the public face of our company. But today, that animal health product business actually only contributes 1/3 of every dollar that we bring in as a company. And that's because in the last 5 years, we've made 2 significant acquisitions that complement this business. And so the first acquisition was the Trutina Pharmacy in 2021. And the second acquisition is actually the Compounding Pharmacy of Manitoba, or CPM, in December of 2024. And so these 2 acquisitions have given us a really significant foothold in the pharmacy compounding market. And so what they've done is actually opened up new markets to us. And so today, Grey Wolf provides essential products and services across 3 markets: the animal health products in the vet channel, animal pharmacy compounding, and human pharmacy compounding. And on a pro forma basis, we are actually diversified across all 3 of these markets, with about 1/3 of our business sitting in each one of those markets. And so I just want to remind people that when I talk about animal health business, we have developed a targeted portfolio of products that are used in vet clinics. We have key therapeutic areas that are behavior, GI, derm, pain, amongst other ones. And our product portfolio in this space really covers prescription nutraceuticals and consumables. And so we have established a track record of getting new products approved, launching them, growing our brands, and have really built out the commercial infrastructure necessary to get products coast to coast. And one of the interesting examples in this space is actually Cilio. And I always like to highlight this product because it is the first innovative branded product that Grey Wolf has brought into the marketplace, and it launched in Q4 of last year. But it's also interesting because for this product, we partnered with Orion Corp, which is a publicly traded pharma company based in Finland. And so because of our experience in launching and growing products in the marketplace, we had built up the reputation of Grey Wolf as being a strong player in the vet channel. And so Orion recognized that we had the focus and the support to really drive Cilio's growth, plus the scale to manage a launch in Canada. And so they've entrusted that product with us. and we're still really in the early days, but it's going well. And so when we think about Grey Wolf in the vet channel, what current and prospective partners are really seeing is a company that's small enough where their product continues to be important to us and to our portfolio, but we have also demonstrated the scale and ability to really move the needle on the products. And so that's really kind of where we focus in on that space. And then when I talk about the pharmacy compounding and kind of the recent addition to our business in that space, I always like to remind people again that pharmacy compounding is a real critical part to a healthcare ecosystem because it's all about meeting the unique need that each patient has. And compounding is really just combining, mixing, or altering ingredients in situations where a commercial product is not available. And our value comes from our ability to consistently deliver the same service from dose to dose and prescription to prescription. So that consistency is essential because a patient wants to know that they are going to have the same response to their medication, whether they're taking it today, tomorrow, or it's the next prescription that they are getting. And so we have the facilities and platform that meets or exceeds the industry requirements for this high standard that patients have. And so we actually have 2 facilities. And Trutina is based in Ancaster, Ontario. It's about 10,000 square feet. And our newest one is the CPM facility in Oakbank, just out Manitoba, just outside Winnipeg. It's about 25,000 square feet. And these facilities are specialized for sterile, non-sterile, hazardous, non-hazardous compounding. And what's really exciting about the Manitoba acquisition for us is that there's this opportunity for capacity growth within that existing footprint. And so as a compounding pharmacy, our focus is all on delivering that same process that's centered around quality, consistency, and timeliness, regardless of the end user of the product that's kind of coming out. And so when I look at these 3 markets, they do complement each other and they align together kind of in a couple of really key ways. And so vets play a multifaceted role. They diagnose, treat, prescribe, and dispense. And so what we have is the ability to leverage the commercial platform that we've built in our animal health product bed to introduce more animal health products and also to introduce compounding services to veterinarians so they can provide better care. And the second way that these markets complement each other goes back to the basic of what pharmacy compounding is and the importance of delivering the same service for every script so that you're getting this quality, consistent product and service regardless of the end user. So for us, there continues to be several levers that I would say we can pull within the business to grow the business. Presently in our animal health business, about 75% of vet clinics across Canada are using our products. I say that's good coverage, but there's still room for us to grow, and we can grow by adding new clinics. We can grow by increasing the share of wallet within our existing clinics. As I said earlier, adding new products and new services into that basis as well. And we believe we can do that because we have the scale and the know-how already built out in that space. In the animal compounding space, there's that opportunity to kind of leverage the platform we have in the vet channel and our expertise that we have in compounding to grow out a companion animal compounding service. And that's a fairly new addition to us. And a really good example of that is actually a product that we just launched at the very end of last year for FIP, which is feline infectious peritonitis. It's a fatal strain of coronavirus that infects cats. And historically, there has been no treatment or management options outside of black market product. And so we've done, like we do on the animal health side of our business, we have partnered with the Bova UK for their unique formulation that's backed by clinical studies and stabilities. And so we are compounding that product and selling it here in Canada in our facilities, selling it to vet clinics, giving vets and pet parents like a trusted quality formulation and filling an unmet need in the marketplace. In human compounding, we operate on a B2B and a B2C model. So there are opportunities for us to continue partnering directly with retail pharmacies that don't have compounding capabilities and outsource that activity. And these can be independent pharmacies in the community. They can be corporate chains such as Walmart or Shoppers Drug Mart. They can be healthcare agencies or hospital systems within provinces. There's also an opportunity for us to grow share of wallet. So one of the areas we compound in is bioidentical hormone replacement therapy. And that's kind of our B2C model where we're working directly with patients, but those patients are on other products as well. So how do we start compounding in the therapeutic areas that surround that space? And so our capacity to take on more compounding at our Manitoba facility really underpins the growth that we see in both our human and animal compounding business. I will kind of just highlight on some of our financial story, which really demonstrates, I think, that our pharmacy compounding business is driving the growth on our established sort of and strong animal health product portfolio. And Paul alluded to the fact that we had just reported our Q1 results last month, and they showed a solid consolidated top line growth of about 31% compared to the quarter last year. This does include, obviously, a first full quarter of the CPM acquisition. And we had adjusted EBITDA growth of 34% for the quarter, taking us to about $4.2 million. I do like to highlight a little bit on a pro forma basis because we only had CPM since December of 2024. If we look at 2024 on a pro forma basis, top line revenues would have been $32 million and about $6.7 million in adjusted EBITDA for accounting for that full 12 months of CPM acquisition. Investors always like to ask too about ownership and capital structures. So about 24% of our shares outstanding are owned by the board, founders, and management still. So we are highly aligned with what shareholders are looking for. And with the CPM acquisition in December 2024, we did take on more debt. So we ended Q1 with $6.8 million in cash and net debt of about $26 million. So this is about a 2.3 times net debt to adjusted EBITDA on a pro forma 2024 basis. If we take out the real estate that came along with the CPM acquisition, then that real estate was about $4.5 million. So I will just quickly close my remarks and then we can get on to questions because I'm sure there are lots, but we've really come a long way since we started 10 years ago, and we have built out an excellent reputation and strong platform in both of our markets, and we know how to execute. And so now we're really just kind of positioned to accelerate our growth because we have more opportunities in front of us I think we can be capitalizing on. And so with that, I will turn it back to Paul.
Perfect. Thank you so much, Angela. Yeah, reminder to everybody that's listening, if you've got a question, use the chat function and I will read it and ask the question. I'll start with a few questions here. You mentioned sort of the cash that you have, the debt you've got. Are you well positioned right now for what you need to do? I imagine if there's obviously M&A, you'd have to relook at resources, but right now you feel comfortable with the balance sheet?
We do. Our experience with the Trutina acquisition is the ability to kind of delever and pay down that debt fairly quickly because the pharmacy business is one of the assets that we like about it is it does generate the cash. And so, the expectation is that the similar thing will continue to play out here. So we are, I said we're about 2.9, but 2.3 without the real estate at this point in time. But I think we are comfortable with where we're sitting at, and we're able to continue to pay down the debt, but also operate within our means from that function.
Now, I can't remember if it were both facilities, but the Trutina and the CPM business you had mentioned has further capacity. How do you go fill the capacity? Like what is the sales process to go and get customers for I guess both of those entities?
Yeah. So when we I look at it a little different from animal to human. So on the animal side, a lot of the animal compounding that we've historically done has been equine focused. There's been a tiny bit on the large animal. Small animal is a spot where we've just started to scratch the surface with the FIP product that we really just released. And yet we have this platform that targets small animal veterinarians. And so we know that veterinarians are using compounded products on almost a daily basis. So we need to start getting the word out that we have the ability to provide that service. And again, if you think about what compounding is all about, there's no commercial product available. And so we can step in when something has come off the market. We can step in when there's no product available. We can step in when there's a back order. So it's around finding the unique needs within the marketplace. And so because of the vet channel platform, I think there's a good opportunity for us to start entering into the small animals. For us, that's a bit of a low-hanging fruit area, I would say. On the human side, two ways we can go about it's continuing to build relationships with pharmacies so that when products come in, they can send that information to us. We'll make the product for them. So that's a B2B kind of business model that we have. And so we continue to build those partnerships and relationships that way. And then the other way is obviously with the patients that we currently have, looking to grow the share of wallet. So if they're on this medication, they're probably also taking these other ones. How do we expand what we're compounding to those adjacent therapeutic areas? And in the human side, we do also do a lot of education, particularly around BHRT. So we are running direct to doctors and nurse practitioners education on what BHRT is, how you use it, what compounding is. So it's just, again, expanding the breadth of services that we offer and making that known to that group of people.
These acquisitions, I'll say, kind of took you away from the early business that this was. As you look forward to more potential acquisitions, I guess the question is, are you looking at other M&A opportunities? And if so, like what areas would you focus on to augment what you currently have?
So we continue to look along two lines. One would be in the animal health kind of vet channel market, and the other would be in the compounding pharmacy space. And I say that because both acquisitions that we did were owner-operated private companies. Owners were looking to exit. And when you look across both of those segments that we cover, you see a lot of the same thing. A lot of private companies, owner-operators, which have the potential. So in the vet channel space, this is an opportunity for us to augment our product portfolio and our offering through that. In the compounded space, there is the opportunity to, again, patients, it's more patients, more formulations that you can offer, expand coverage. Like we have coverage nationally, but you can expand it even further with facilities and maybe in different locations versus, which is one of the reasons why we've kind of gone out west with it. So there's a lot of opportunities that I see on both the fronts.
You seem very excited about Cilio. I'm just curious, what is that what gets you the most excited about the business going forward? Or is there what other parts are you excited about and optimistic on?
Yeah. So in the animal health products market, it's an exciting product for us because it is the first branded prescription product that we have launched. We do have a portfolio of legacy products that have been sold for a really long time. We have brought, I would say some generics to the market, nutraceuticals, some very interesting nutraceuticals, but this is the first branded prescription product in our portfolio. And it's a big deal. And when we launched it at the end of last year at conferences, we actually had people coming up to us going like, how did you get that product? Like, you're a small company. And the reality is Zoetis launched that product in the US. And yet they came to a Canadian entity that knows the Canadian market to launch it here. So that's a testament to us about the reputation that we've built up and the stuff that we're doing. But it's also about bringing a product for which there is nothing else in Canada to use. And so Cechetto is for acute behavior and anxiety, particularly around noise. And right now, you're probably putting your dog on a human product that's knocking them out or making them very lethargic, whereas Cechetto has the effect of actually calming the dog down, but not that lethargic state. So they can still go for a walk with you. They're still interacting with you. Like, it's a night and day difference. And so and behavior is one of those fast growing markets, I would say, in the space, as more and more people become aware of kind of mental health and anxiety, and it trickles down into the pets as well. So it's just a very interesting product, building out our behavior portfolio, but unique to the market.
And can investors expect more of this type of opportunity? Are you guys out, looking for more of these type of sort of drug products to market into Canada?
Yeah, yes, this is the area that we'd like to go on as part of our business development, is always finding unique opportunities, things that are kind of missing for the market. So, I mentioned FIP already, and that's another one that fits this. We did the same thing as we did for Cilia. We partnered with a UK company. The product was launched by a massive compounding pharmacy in the US. We've launched it here in Canada. So we're always looking for those things that are a little different, that fit the need within the marketplace. And that will continue to be the focus of what we're looking to.
Fantastic. We've got one of our members has commented here that, the animal health part of the business was down year over year. As luck would have it, there's a Globe Mail article out on pet owners skipping vet visits.
Yeah.
What kind of trends are you seeing in the space right now, particularly around that type of issue? The economy, as much as we all love our pets, we do tend to spend a little bit less money on pets as things slow down.
You are correct. And I think we started commenting on this about 12 months ago, where the macro environment effects were starting to trickle into the pet space. And so, we saw massive bumps during COVID where people got pets and there was a high level of spend. And some of that was driven by people were at home, they weren't spending, so they were spending more on their pets. Some of that was being driven by the fact that you also have a pet life cycle that plays out. So puppies and kittens need a lot more spend than, a teen or adult dog. And then you're into that geriatric phase kind of idea as well. But then you got hit with all the macro inflation and everything else. And so it started on people's big ticket items and it moved down to their grocery bills. And we started commenting about a year ago that we're seeing signs of softening within the industry. And so we are seeing, to that article, yes, we're seeing vet visits are down. So people are maybe not coming in for the health and wellness checkup. They're still tending to come in for the emergency treatment, but maybe to forego the dental cleaning this month, or maybe they're having to make a choice on not this prescription food, but somebody else, but this one over here, because in the retail space. And so we are seeing some of that play out. We do have a really great product portfolio though, that I think is well positioned. So a lot of our consumables are anesthetics. They're still needed for procedures and surgeries that's being done. Our GI, it's a product that you can buy and put on your shelf, so you don't need your next vet visit. You can use this product to treat when it's an acute GI issue right away. And so behavior, I think, is there, and we're entering in. We also have to remember that Q2 and Q3, we're entering in spring and summer is the behavior season because of thunderstorms, fireworks, and everything else, and car trips and all those crazy things. It's also what we call the garbage gut season, because the dogs are out there eating everything and anything on the ground. And so there's a little bit of seasonality that may play into some of that over the next little while compared to the winter season as well. So we've got a great product portfolio, but yes, you are seeing some challenges, I would say, in the vet clinics themselves.
Apart from the sort of the slowdown in the economy, what other sort of challenges are you facing as a business right now? And what sort of keeps you up at night is the question I always ask.
Yeah, it's from my side of things, I would say it's regulatory, and then it's kind of the macro environment impacts. Health Canada continues to be one of the most challenging regulatory bodies. We hear that from a lot of people. So there's always those concerns around getting products approved and how long is it going to take to get it approved and that sort of thing. And then from the pharmacy side of the business, you're dealing with regulations at multiple different levels. So every pharmacy is regulated at a provincial level, but because we run compounding facilities, we want to follow the NAPRA guidelines, which are national guidelines that are in place. So it's around just ensuring that, we're abreast of what is the latest and that's coming out of those places. So that's a big one. And then, yes, there's, the greater environment is continually top of mind, and ensuring that we are demonstrating value with the products that we have, no matter the times.
Bit of a curveball question, but you've now been the CEO of a public company now for a couple of years, and a microcap of all things, a Canadian life science microcap. I mean, it's almost like you've got a bunch of check marks against you right now. What's it been like? What are the capital markets? What are the brokers or investors or all the other players out in the space? What's it been like? Is it improving? Are they resonating or coming to the story? What can you tell us?
Good question. I think for any small company, there are challenges, particularly in Canada, just to grab people's interest and to kind of hold it when you're this small. And so it has been a lot of, I would say, hand-to-hand combat. To really get in front of people, to pitch this story, tell it over and over again. And so there are some people who can see it and who kind of get it quickly and come on board. And then there's others who were just too small, and we're too small to even hit their radar. So they may be interested, but we're just too small to even hit their radar. But I think the key is that you just have to keep on telling the story over and over and over again. And, we've had a very supportive shareholder base. I would say up to this, it's, a lot of comment is about low trading volume. Well, some of that I think is because we've had a supportive shareholder base, and some of them have been around since when we were private, and they're still with us. We have also seen some new shareholders that have come in the past 18 months. So you see us slowly gaining some traction in that front, and that's really kind of encouraging to see that support come on board. But really it's around finding the right shareholders that kind of believe in the long-term plan of the company.
Yeah, no, it makes sense. And we hear the same thing from other CEOs in your situation, so not unusual. Okay, so us investors paying attention, where do you think are the things we should focus on going forward? Like what metrics or maybe even catalysts do you think makes the most sense to pay attention to?
Yeah, so I think we continue to track our adjusted EBITDA as kind of a proxy for how well the business is doing. I think continuing to pay down the debt that we have is another good thing that I would keep my eye on from that perspective. We're all about managing our resources and living within our means and executing well. And so I would, I'd be looking at those. And then just new launches or opportunities that keep coming to the table.
Okay, fantastic. And then, just the last question is basically open-ended. Is there anything we missed, or is there any key message you want to make sure everybody walks away with today?
No, I think we have a great business. And I think despite all the noise that may be going around us, we have really good products and services that we're offering. And so we're just going to continue to focus on executing well, and finding those areas and opportunities of growth for our portfolio, but also the new areas, whether it's a new product or a new clinic that can come on board. And that's really all I think I can say on that point at this time. I think we've touched on everything else in terms of where we're at. It's going well, and it's just about continuing to execute.
Excellent. Excellent. Thanks so much, Angela. We've been speaking with CEO Angela Cechetto, Grey Wolf Animal Health, symbol WOLF on the Venture Exchange. Angela, it's great to catch up, and look forward to next quarter or sometime in between if there's some other news. Appreciate it.
No, well, thank you for the invitation again. It's a pleasure to kind of update everybody on the story and where we're at.
Awesome. Thank you so much. And bye for now.
Thank you. Yeah.
Bye-bye.